Hello everybody and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday the 17th of October and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 386 of All the Chatter That Matters. And we're live on tape from our virtual studios in West Yorkshire and Surrey as new lockdown restrictions are introduced across the UK. Some near you, I understand, Phil.
Yeah. There's some. I'm not far from Manchester, and obviously I think Manchester are the very political conversations this week coming out of Manchester on lockdown.
Oh yes,
as everybody's seen. But yeah, we just still here in my little office down in Rishworth as you are down in Surrey there. So, but I am finding it quite interesting lately. The odd conversation now I'm having with people that they're in the car. You know, they're ringing you off their mobile from the car. All of a sudden, rather than Teams calls and Zoom calls. People are out and about a little bit more on the mobile phones now because they're going places.
Yeah, that's an interesting point because I can't remember the last time I spoke to someone who was out and about.
Yeah.
So maybe this is the next trend.
And mobiles don't get used much now either for making actual phone calls.
No,
it's all on. Everyone phones each other on Teams now, which is fairly unique now. Having those conversations that you get the notification that you've got a Teams call coming through. That's nicely sat there.
It's odd speaking to someone now without actually being able to see them.
Yes, yeah. Redundant mobile phones, yeah. Who would have known it? Who would have known it? So we've got an apps. I mean, this week's headlines. I mean, we've probably trying to get our head around some of them this week. We've picked some of the best, I think. There's been a lot of updates, hasn't there? A lot going on again, as usual, with the sector at the minute. But we've got some reasonable headlines this week, haven't we, Curtis?
We have indeed. Yeah, let me take you through them. So we've got the full year results from Sytner, and we've got a September update from Marshalls. We've got Virtue responding to speculation about buying some BMW sites from Inchcape. There's an interesting story from Car Dealer on carmaker support for dealers in regional lockdown areas, so very topical there. Here's a good question. Will EVs be in short supply next year as car makers concentrate on EU markets? We'll take a look at that. Some research from What Car on more than a third of buyers say they're happy to purchase entirely online. And finally this week, we've got some fond farewells to some much-loved small cars.
Yeah, and it's kind of an inclination of what could possibly come in as we start to see some of these manufacturer mergers, isn't it?
Yeah, I think it could actually be a regular weekly spot.
Yeah, you get that feeling.
Yes, yeah. The trouble is manufacturers don't tend to tell you when they discontinue certain models, so you're kind of dependent on it being picked up by the motoring press, which is exactly what's happened this week.
Yeah, and you can see it now starting to pick up many from there now. So we jump on to our first story, and this is that Sytner Group, which is obviously part of the Penske Corporation, have reported their financial year, which I think we've agreed that it's till the end of December, so for the full year 2019, and they've reported a 36.6% decline in 2019 pre-tax profits. So that's the Sytner Group in the UK.
Yeah, so the revenues are down 1% to £5.92 billion and actually down 36.6% decline in pre-tax profits. So they dropped from 113.2 million to 71.7 million. And it's worth just highlighting and sort of reinforcing this is for last year. This is 2019 calendar year up until the end of December.
Yeah, and so say this is part of obviously the car shop brand comes under there, which obviously recently with both Jonathan Dunkley, Chief Financial Officer, and Brian Scott leaving the business, and then with James Dunkley there. But again, they're talking about obviously that trading is not expected to continue quite as strongly going forwards. However, the directors do consider that the ongoing effects of the coronavirus pandemic, should we say, are likely to be less dramatic than the first wave of infections in 2020. So, kind of they're looking now forward to some of their commitments, haven't they, towards 2023 from a financial position and where they're expecting to take the group.
Yeah, and the story that we're quoting this from, which is in AM, it does highlight that used car sales volumes had actually risen during the period by 1.3%, and that was to 138,078 units during 2019. And as you say, there was a bit of a shakeout of the car shop management team back in December. Also within the story, it shows that there was a £7 million pre-tax loss from business operations discontinued during the reporting period, and that included a number of VW sites.
Yeah, so definitely one that they're obviously talking about a strong position for trading as we enter the new year there. So, and we've had some result which is kind of we weren't really expecting this one this week from Marshalls, and it was covered on Car Dealer magazine, and they also did an interview with Dash Gupta there at Marshalls. But Marshalls Motor Group shocks industry as it revises profit prediction up for 2020 after a stunning September performance. So that's purely on the back of the results of what they did in September.
Yes, and Dash was very visible this week. I caught him on Sky News. I think he was on other channels as well. Yeah. And yeah, as you say, this is purely about September. And what a contrast to our story last week on the September sales figures and the sort of some of the sort of dour comments coming out of the SMMT, because September for Marshalls was very, very strong. New sales were up 18.4% against a market which was down 4.4%, and retail sales were actually up 19.1%. But it didn't stop there. Used car sales were up 15.7%, and predicted revenues were down 7% for the year, but they're talking about profit now for the year.
Yeah, 15 million.
Yeah, 15 million.
He's gone from a forecast back in August, obviously, after a few months of trading post lockdown, where they were forecasting that it'd be a good result to break even after the lockdown and the timing of the lockdown, the lost business that the company incurred there. But to now turn that into a reforecast of a £15 million profit for the year is a phenomenal turnaround for the group, isn't it? And as you say, very strong trading across the new and the used car market. And I suspect, we talked about it at the time where Marshalls was one of the ones that were talking about a strong September order take into the double digit for the group as they entered the month of September. And I suspect that this performance will actually have a bit of an overflow into October. So it'd be interesting to see what they do in October as well, because I suspect they've got a strong order take going into the fourth quarter after September as well.
Yeah, and it's also worth highlighting that it wasn't all good news, because within the announcement to the stock exchange, it was mentioned that consultations have begun on 4 sites which are planned to close, and that's Cambridge Hyundai, Bury St Edmunds Ford, Nebworth Vauxhall, and Poole Mercedes commercial vehicles. And the piece in Car Dealer says the sites accounted for collectively £47.3 million of turnover between them, but that accounted for a £0.1 million loss for the company. So that balances some of the positives there.
Yeah, definitely. And I say, car dealer do point out that that the results for Marshalls is following a similar set of impressive numbers from Virtues the week before, and I think we mentioned that on last week's podcast. So again, some good results in some challenging times from some of these leading operators. So, and staying with Virtue there, and going over to AM Online, and it's AM have dug a little bit into some acquisitions reported around the Virtue business, and saying that Virtue confirms BMW acquisitions move after Inchcape's disposal speculation. So it's quite interesting because we mentioned, I think, Mr. Brealey and their sort of exit of some of the businesses on the down south of some of the operations, but there was speculation that moving sort of some of their businesses from up north as well, and the speculations that Virtue are involved with some of those acquisitions.
Yeah, and the story really revolves around the possibility of 13 Cooper BMW operations being sold by Inchcape, but just adds that it is speculation at the moment, and Inchcape within this story have said that they will not comment on speculation, but Virtue does say that it is interested in making a number of acquisitions, including a small number of BMW dealerships, and Car Dealer actually ran a story this week alongside this, and that they were speculating, there's that word again, that it's not just Virtue who are interested in these sites, but Jardine as well. So worth heading over to Car Dealer's coverage to get another angle on that particular story.
Yeah, and it is difficult to I say, it is full speculation. We know that Virtue have been on the acquisition trail. They've mentioned it a number of times in their financial updates that they're in a strong position for further acquisition. We know that many of the AM100 businesses are looking to acquire, but it's got to be right. It's got to be aligned with their strategic planning and partnerships with the brands. And we know that Inchcape have been realigning some of their brand partners and exiting one or two businesses in the UK. But again, maybe there's no smoke without fire, but we'll watch that one and report on it as soon as it does become available.
Well, yeah, I was going to say, I suspect we'll have an update on this fairly soon, so stay tuned.
If something's happening or not, it's happening, and yeah, it'll be if there's some rumours out there, then it'll either be happening or not soon enough. So yeah.
Yeah, and talking of trading updates, I understand you've got an update on Lookers, because their results have been delayed until November now, haven't they?
They have, and it's sort of a quick update from Auto Retail that they've sort of done a little bit of digging around on a trading result that has come out, and we know that, I think we mentioned it recently, that there was reports that there's an expected update from Lookers due any time, and we know that they've had their shares suspended through deferment of their financial results, but they reported a trading update and said that the group saw a 13.6 lift in new and used car sales in the third quarter of this year compared to the same period in 2019. They're saying that the stock market statement from the group has said that trading in Q3 resulted in underlying profit before tax significantly ahead of last year, largely offsetting the loss recorded in the first half of the year. But it does go on to actually say that they have deferred the statement again for the full financial year till November. Yeah. There's still investigations taking place from the FCA as well as looking at some of the auditing stuff that's taken place through Grant Thornton and Deloitte. And I believe, looking at the report, some of their banking partner has also appointed some support as well into the business. So still a lot going on with Lookers there, and we will see what comes from out of that. So they're saying that they've still got a revolving credit facility of 250 million with 5 banks, but that does expire in March of 2022, and that the group is exploring refinancing options during the fourth quarter of this year. So busy boys over at Lookers at the minute, I suspect.
Yeah, but at least some positive results there for Q3. So let's hope they're getting things together there now.
No, I think you're spot on there. I think at the end of the day, the deferment and everything is all about historical finances, and they've along with other groups, as we've just mentioned before, that they've had a good trading period through the third quarter of this year, and let's hope that carries on through the fourth quarter for them as well.
Yeah, so next headline is from Car Dealer, and it's car manufacturers begin to support dealers by guaranteeing bonuses as fears over second lockdown intensify. So it's an interesting story, this, and they don't actually name the manufacturer, but one manufacturer has guaranteed that bonuses will be paid in the fourth quarter for sites that are affected by lockdowns. And as we were saying at the beginning of the show, obviously there's a lot of talk now about regional lockdowns being rolled out. There are a number in place already, but this particular manufacturer, who, as I say, is unnamed, will support dealers with 100% bonus payments. So that's the kind of support package that's really welcome news for the sector, because it shows buy-in from the manufacturers, and manufacturers thinking long term, to get dealers through the current crisis. But of course, whether or not this will be rolled out by other manufacturers remains to be seen.
Yeah, definitely. I think I heard similar things from certain manufacturers again through the early days of lockdown, where on that recovery plan, that they were going to sort of suspend targets, trying to help the dealers out by giving them the target bonus levels and things like that. Not all manufacturers, but again, I think as we've seen through some of the results that many of the franchise dealers have reported through sort of June, July, August and September, I suspect some of that has been because of the drop in targets and things like this. So I think generally, there's been support from the manufacturers, because two things really: they need the dealer network to work with them. They understand that there is some supply constraints still taking place as well that we know impacted on the September results. So I think it's good that the manufacturers are working closely with the dealer network in times that still remain challenging, as you say, particularly with further lockdowns, because we don't know what impact that will have on consumer activity now as some of the areas go into further localized lockdowns.
Yeah, and that's a point that's picked up by Car Dealer, because they referenced a story they ran last week about how sales at some sites in Wales affected by lockdown had actually seen sales drop by 70%.
Yeah. I mean, it's that's the thing, and that's what's challenging. And I feel for the dealers that are sat within sort of these lockdown areas and not knowing what's happening, because it does change very quickly. All of a sudden, what a consumer can and can't do, where they can travel, etc., does just change overnight. So you do feel for these dealers just trying to respond very quickly to what's going on. But I think it's testament at the minute, as we've just said earlier, with some of the results that we've seen lately with the financial updates, particularly on the third quarter and September, that they're doing well. They're getting their way through it, and they've got systems and processes in place. So well done.
You're listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, and wherever you find your favorite podcasts, which means we're live on a device near you. pretty much whenever you want to hear us.
Somewhere down there.
Somewhere.
Yes. And interesting story that we're just going to go through now is one that is actually on This Is Money. And we'll read it out to you so you don't have to go through all the advertising pop-up banners that you get with This Is Money. But the title says it all. So, will the supply of new electric cars to the UK dry up in 2021? So they're saying that ministers agree regulation that will see surging plug-in vehicle demand continue after Brexit. And we've sort of talked online and offline about this one, haven't we, of the uncertainty and lack of clarity as to what's happening around EVs in the post-Brexit period going into 2021. We've got the CAFE legislation that still takes place across the European market, and there was all this talk around whether actually would the UK be a location appetite for the manufacturers in a post-Brexit world, wasn't it? That, you know, as the UK government pushes that move towards EV, and now including the ban on hybrids potentially by 2030, that actually at the same time you've got this risk of actually the UK becoming lower down the pecking order for the electric vehicles coming out of the European market. So that's sort of based around that speculation, isn't it?
It is, yeah, and the crux of the story is really around a meeting that was held last Tuesday when MPs tabled new regulations in Parliament to actually incentivise manufacturers to sell green vehicles in the UK, which will ultimately see demand for EVs, plug-ins continue to hopefully grow here. And it gives that certainty that was lacking. We don't know what the incentives are. It would be interesting to hear what they are when they're actually announced. But that's a welcome development, especially as during the week we actually heard that there's the launch of the first two car CAS zones, clear air zones, outside of London are actually opening in Bath and Birmingham, and that's during the first half of next year. So that's welcome news that we'll see incentives to continue to bring these cars into the UK.
Yeah, and interestingly, this week there's been some U-turns as well, haven't there, in places like Bristol and Leeds and others on the zoning as well. So it's the local councillors have obviously thought, you know what, we could do without this at the minute, and done a sort of a bit of a U-turn, haven't they, at the minute, and delayed the implementation of the zoning.
Yeah, you're right, because Bristol was talked about as being one of the first, but it seems to have gone to the back of the queue, and Bath has appeared from nowhere. So Bath and Birmingham will be the first in that order.
Yeah. So we'll watch that one as it comes together. And moving on here, so you're going over to Motor Trader, and this is a report that has come out this week from Whatcar, and the indication is that more than a third of buyers happy to purchase a vehicle entirely online. So that's looking at that full end-to-end proposition of buying a vehicle in that online in that digital space, isn't it?
It is, yeah. So as you say, it's research by Whatcar, and they found 35.1% of respondents said they would be comfortable buying their next car entirely online. Now, because it's Whatcar, we're kind of assuming this relates to new cars. It's not entirely clear in the story, but it looks as though that's probably what it's alluding to. It goes on to say a fifth of buyers also said they would prefer to negotiate online rather than face-to-face. Well, no big surprise there, with 15% saying buying online will save them time compared with visiting retailers.
Yeah, so again, it's good news. I think that as we've talked around some of the influences of COVID-19 and the acceleration of that digital proposition across the network, I think it's good that the survey coming out from Whatcar does align to where the industry experts believe the market is going and where investment should be be heading as well in terms of that online space. So, and this is about, we've always talked about whether it is partial online or fully online, but actually, do you know what? They are now happy, and as you say, it's positive there that there is a third of the customers that would be happy to do the full purchase online as well. So that's a positive move now. But we know that there's still a need for physical dealers as well in all of this. So yeah, some good positive results there.
Well, yes, because presumably the other 2/3 are quite happy to carry on buying cars as they are at the moment.
So going back to This Is Money, and quite an interesting one, this one, because this is kind of now, we're talking about before, weren't we, around the EV legislation, etc., and talking about these zonings and what's happening in that market in a post-Brexit. But also we've talked recently of the manufacturers and that sort of acquisition by and partnerships of the manufacturers. But we're now starting to see a little bit of the changes now that some of these will have an impact on, and they're talking about the nation's favourite car ditches diesel, and that's the Ford Fiesta, now only sold in Britain with petrol engine, as it cuts out the out of favour fuel type, the diesel. Predominantly it's the 84 brake horsepower 1.5 litre TDCI engine from its Fiesta range, which is a cracking little car, that one as well. It's done a good job.
Yeah. And it used to be incredibly popular, but the figures that are reported in this story show that last year, 2019, the diesel Fiesta accounted for just 2% of all new Fiesta sales. So it just shows that where the market has gone there, and we will be seeing more and more of these stories, as we said at the beginning of the show, as dealers start to reshuffle their lineups, and they will start deleting a growing number. I think they'll start deleting a growing number of these small diesel cars, which have just lost their audience. There aren't buyers for them, so it's just not worth their while manufacturing them and bringing them into the UK.
Yeah, you can see it. I mean, you're talking about a diesel market share of 16.8% year to date this year, and it was even, and that's compared to last year at 25.7%. So, the days of diesel dominating the 50-60% of the new car market have well and truly disappeared now, haven't they? So, you can see the logic from the manufacturers in building these vehicles, particularly small vehicles, with diesel propositions in them. And I know that a long time ago, Citroen dropped the C1 diesel because there was no market for that product in the UK or elsewhere. I think it was just, there was no need for having a diesel engine in that size of vehicle in the super mini city car sector. So I think we'll see a little bit more of that as we move through.
Well, in fact, talking of the Citroen C1, you won't be able to buy that for much longer either, because the final story this week comes from Automotive News Europe, and the headline is PSA to ditch Peugeot 108 Citroen C1, reports say. So another highly speculative story, but it's based on three sources from Reuters is where the original story came from, and it is talking about PSA withdrawing these two cars, and in fact, these two cars they're built in collaboration with Toyota as well, with the Toyota Aygo sharing the same platform. But PSA look as though they will be phasing them out, and they will replace them with probably a Fiat platform. I mean, that would be if we're going to speculate, I would suggest that once PSA merges with Fiat, then it's got a ready-made small car platform there that they can put Peugeot and Citroen vehicles on. So that would make an awful lot of sense. So, but that partnership with Toyota, it does go back a number of years, and it has been very, very successful.
No, you're right, and I think both PSA and Fiat of FCA have declined to comment on it. The PSA's merger project with FCA has also increased the options available, as you say, with two of the sources said that as the FCA has no intention of abandoning the small best-selling Panda and the 500 models. Both have hybrid versions, and the 500 is also available in a full electric mode now, as we know. So you can see where this PSA parent ownership is now starting to look at what vehicles they have in each segment and what fuel types they have of those sectors within each segment as well. So you can see that one starting to increase as you say, as that the merger with FCA happens, and they start to look at their model lineups and representation of those models in not just the UK but probably across Europe and some of the international markets as well. So a lot going on, and I think we'll see a lot more of this view and strategic looking at the collaborations and the cross-platform sharing and the model lineups as we move forward. I think I'm not sure, it was Mike Jones, when we had Mike Jones on talking around the market. I think there's an expectation that we're not going to see the level of new car choice in the future that we've been used to in the UK, are we?
No, and if you go back 5 or 6 years, there was an acceleration in developing, producing, and selling new models, and every manufacturer was moving to fill what they saw as at the time certainly as gaps in their lineups. But I think some of those lineups are going to reduce. They've got to.
Yeah, definitely. So again, lots going on this week and lots more to come from this. So we'll try and keep you up to date with everything as it happens. I suspect that we'll be talking about further financial results as they come available. I suspect we may talk about acquisitions in the next week or two as well. And hopefully at some point we'll see sort of the updating from Lookers at some point in the future. And as you said earlier, Curtis, I think we're going to be talking about obviously some of these realignment of these models and fuel types as we move forward from the manufacturers represented in the UK market. So lots going on, and we'll try and keep you up to date with it.
Yeah, but that's all for this week. You've been listening to the Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Join Philip and I again next weekend for all the chatter that matters. Until then, it's goodbye from me.
And it's goodbye from him.